So there are 5 moves happening right now that'll hit your wallet harder than you think. Gold is skyrocketing, the feds are cutting rates again, and debt is through the roof. Yet we're being told that the economy is strong. Let's get into it. Number 1, the gold spike. Gold peaked near $4,400 an ounce this fall, the highest in history. And that's not a sign of confidence. It's a signal of fear.
Gold prices, new highs. What does that tell you about the economy? Is it a warning signal?
So listen, you can take it a bunch of ways. Yes, I actually think that's more of a safety trade warning signal. People are worried about where the economy is going, what the Fed's going to do, especially now there's this government shutdown. There's a lot of uncertainty. Stocks are trading at all-time highs. There's stretched valuations. We've been talking about it. We've had no consolidation at all. And so I'm in the camp that I think this move in gold is really a push for safety. People looking to actually have gold that they want to hold on to, because in the end, it is the ultimate safety trade.
But I'm wondering, why are central banks around the world buying gold? Because they started this uptrend in prices. They're buying all over the place.
Right. So they're buying it, right? They're trying to increase their reserves in a challenge, what I think is going to be this challenge to the U.S. dollar.
It means investors don't trust Washington to protect the dollar anymore. Because when you print trillions and pretend debt doesn't matter, smart money runs to something real. And when the dollar loses value, you feel it at the pump, the store, and every import that you buy. Number 2, the Fed rate cut. So the Fed just cut rates again, 25 basis points. It went from 4% down to 3.75. And they're calling it a precautionary move to support growth. But the translation is that they're seeing trouble coming.
Why did the central bank do this today?
Labor market. That's really the focus. And it was the last time around when they cut interest rates the first time this year, back in September. Chair Jerome Powell emphasized that they're seeing growing weakness in the labor market. And yes, inflation is rising. Remember, the one piece of economic data from the government that we got during the shutdown came last week in the form of the Consumer Price Index. It said that inflation has ticked up to 3%, but it was less than expected. And so it's not that Chair Jerome Powell said, hey, we're out of the woods when it comes to inflation, but it's really the fact that they're seeing that concerning weakness in the labor market. He was actually asked at one point about all the layoffs that we've seen this week in the past few weeks at Amazon, UPS, Target. And he said, quote, they're watching it very, very carefully, Ed. So it's really all about the labor market and wanting to ensure that that doesn't get worse.
Inflation hasn't disappeared, it's just slowed. And spending is down, hiring is slipping, and they're trying to soften the landing before it gets ugly. And they say it's about stability, but here's what really happens. The markets shoot up, investors celebrate, and Washington pats itself on the back. But meanwhile, your savings lose value, prices stay high, and the dollar keeps slipping. It's not stability, it's a cover-up. It's a way to make the numbers look good while your wallet quietly bleeds. Number 3, the debt trap. Credit card debt is around $1.2 trillion. It's a record high, and that's definitely not progress, that is pressure. And even with rates dropping, people are not catching up. They're just treading water while banks rake in interest. And they've turned personal debt into a business model, and you're the product. And it doesn't stop there. Number 4, the housing lockout. Housing prices aren't crashing, they're stuck. Affordability has long since gone, and the supply of homes you can actually buy is still pretty tight. Investors are swooping in. Nearly 1 in 4 homes sold this year went to buyers who will rent or flip and not live in them. So when they say the market is cooling, what they really mean is that you're being priced out. And in my home state of Michigan, if you get a chance to actually buy something, your property taxes reset at today's inflated values. And that bill can jump thousands of dollars overnight. And it's a similar story in many states. Higher prices lead to higher assessments, and new buyers get stuck with the tab. The American dream, It's being turned into an investment product, bought up for cash, then rented back to you for more money. And number 5, the dollar's decline. BRICS nations are quietly shifting trade away from the US dollar, using their own currency and building alternative payment systems. That means the dollar's global influence is shrinking, and our buying power shrinks with it.
While the gold is strong, the denominator, the US dollar, is on track for its worst year since 1973. So I think what's really happening here, and in the background too, by the way, we have record deficit spending happening all around the world, by the way. And I think what's really happening here is the new textbook gold standard, no pun intended, safe haven trade has become gold and Bitcoin. And I think that theme's going to continue. It's been an incredible run where gold's up over 45% year to date. We may be due for a pullback soon, a little cool down. But I think we'll see 5,000 gold in the near future.
And when the world moves on from the dollar, imports cost more, groceries, gas, electronics, everything. And here's the part media won't say. This didn't start under Trump. This trend has been building for years because of weak global policy, overspending, and energy dependence. And now it's Trump who has to clean up the mess. But you can bet they'll try to blame him for it anyway. Because for them, the narrative always matters more than truth. Everything we're watching right now, the gold spike, the debt, the housing mess, it all points to the same thing. They keep calling this growth, but it's not. It's consolidation, power moving from families to institutions, from workers to banks, and from citizens to government. The numbers rise, but the people fall behind. And unfortunately, there's no easy fix for any of this. But seeing it clearly, that's the first step to staying free. That's it for today, folks. Like, subscribe, and share. It really does help get the message out. And remember to stay strong and keep fighting the good fight. We'll see you next time.